I know I'm not as handsome as Mo, but I'm glad you're here today. I see everyone in the live chat. Mo is just tanning right now on the Pacific beaches of Manzanillo, Mexico, in the Everything Money Mansion. But I'm here for you today. Mo will be back tomorrow morning. I thought we'd do something fun. We have an old friend of the show that we're going to bring on. As you know him, you love him, and here he is. I give you Jimmy. Welcome in. How are you, my friend?
Good. How are you? Hi, I'm Jimmy.
Of course, everyone's looking for that, for your catchphrase. I'm great, Jimmy. You know, we started a fun relationship last fall. It was. We reviewed one of your videos. We knew of you. I certainly knew of you, and we introduced Paul to you. The love was mutual. We had you in for a few days last fall, and it was great. And so when Mo went to Mexico, I saw an opening in the live stream to have you on. And we just set this up a couple days ago, so I'm glad you're here. How was life? How were the holidays? Give us an update on your life to all your glorious fans out there.
Yeah, holidays were good. Life is going well. we got our community gradually growing. We're up over 500 people, which is awesome. Holidays were good. I got two little kids. I got a five-year-old girl and a 7-year-old boy. So they are all in on Christmas time. So that was exciting to see. Sort of that alone made the holidays really worth it.
Yeah, I have two kids. I have two kids myself, Jimmy, and so I couldn't buy just one Oculus. I had to floss and buy two sets of Oculi. So here we are, guys. We will get to all of your comments today. We'll talk about all of your comments and questions. We'll talk to Jimmy about what he's building over at his channel. And in general, guys, I frankly wanted to keep sort of the numbers out of this. I know you guys love most sarcastic news in the morning. And a lot of our videos are very numbers based. But Jimmy and I are just going to go over some questions. I'll pose them. I'll pose your questions to him as we move forward. Jimmy, it's funny is I think this conversation sparked because you mailed me a book and last week, and it meant a lot to me to get a gift out of the blue. The book is The Obstacle is the Way, and you and I were discussing this book yesterday. I've started this concept. This concept has spoken to me going back into my athletic days. I played college football, and there's a lot of tough times playing Division III football when no one's in the stands except your parents. And but my coach always said, the journey is not at the end of the road. The journey is the road that you're on, and you've overcome a lot of chaos in your life, which I don't even know a lot of your listeners even know, but you've overcome so much. So talk to me about why this book speaks to you and this concept. You signed it moving forward. Just keep moving forward, and I do love that concept. So give me your thoughts on this book and why you sent it.
Yeah, so. It's actually one of my favorite books, and I know with my kids, as my kids are starting to grow up, I'm trying to teach them the concept. I made our family motto, keep moving forward. And the idea behind it is that sort of no matter what happens, you just have to figure out sort of a way to keep moving forward. It's really that simple. It's that book in particular, the reason why I sent it over to you guys is because I think that book describes, one, it's a very easy read. It's very short, simple stories. Ryan Holiday, the author of it, he's awesome. But I think that the idea behind it is that everybody's going to face problems in their life, and the concept is not necessarily that you look at those problems and say, okay, what if this problem isn't that bad? Or, you know what, I'll just ignore the problem. The concept is much more, the way I look at it at least, it's much more of this problem is exactly what we were looking for. Now we've identified a weakness or whatever the situation might be. How can we run right at that problem? How can that problem become a strength? You talk about sports. I know I grew up playing hockey. And what Seth was referring to, I had gotten hurt when I was in college. And I'll tell the story. I'm going to create a video on the story at some point. But it's something that I haven't really shared with many people. But basically, I got hurt. I ended up in a coma. And everything sort of changed after that. And I spent a few years in rehab trying to sort of buck what had happened. And then I began to realize, well, what if it's not only what if this isn't as bad? What if this is exactly what I need? What can I learn from this? How can I come out of this stronger than before? And I think sports is a perfect example of that at times you just have to sort of battle through things. And, the guy standing in front of you trying to stop you, the goal isn't necessarily to avoid him. The goal is to figure out how to win. The goal is to, he's not some problem that we deserve pity for. It's, he's doing his job, we're doing our job, and you just have to figure it out. And, I think that is half of sort of the interesting part. But I know for me, when I was trying to figure out how to grow, the Learn to Invest channel, our community. I was trying to figure out where to go. And what was interesting is our YouTube channel, our size, subscriber base was continuing to grow, but the views weren't going up. In fact, the views were going down. From a monetary perspective, trying to pay the bills and stuff, if the views are going down, money's going down. And it was really getting frustrated. I went through about 6 or 9 months that everything was like, it looked like we were growing from the outside, but on the inside, we weren't growing. And I really couldn't figure it out. And then you guys go ahead and do the review, which was nice enough. I would say that Paul, now that I've gotten to know Paul, it was a gem of a review. I mean, it was wonderful. But at the time when I first watched it, I was like, oh, I feel like he's looking for something bad. I feel like he's looking for a reason to take a shot at what I'm doing. But, the very idea was, hey, okay, if this is the problem is I can't grow. I watch you guys are growing like crazy. You guys are doing way more videos than I seem to be able to do. Let's go meet them. Let's reach out. Let's see where this goes. And it was really you guys that introduced me to the idea of, hey, you can have a community. What if you took this beyond YouTube? What if you built a community, you built, a website, you did something that brought some tools that aren't out there right now. And so that was the exciting part of it. It was also the reason why when I sat down to read the book again before the holidays, I thought of you guys and I was like, you know what? I'm going to go out and get some copies of this and ship it off to you guys just in case. You guys, I highly recommend it for anybody who, if you're running into a problem in life, in anything, whether it be, work or school or family or relationships or health or whatever it is, I'm a huge fan of the book because it just gives you a different way of looking at things. And I'm a big proponent of, if you want better answers, ask better questions. And this sort of makes you ask those questions of yourself. That's the idea, at least.
Yeah, I love the concept. I'm excited to read it. So we will get to all of your questions and comments, guys. I see them all flowing in. We welcome all of you all over the world. Jimmy, I'm always surprised and shocked to see people all over the world joining us. It's great. I know cool. a big question. I guess the fourth quarter filings must have came in because the news either last night or this morning was Munger has, I guess, tripled down on Alibaba. I didn't read the story quite yet. I bathe every morning, Jimmy, so I spent a good 20 minutes contemplating life in the tub. So I missed my my morning news with Mo. But give me your thoughts. It's funny. We had the great opportunity to interview Monish Pabrai, and I told Paul when we went down there and asked him and his analyst about Alibaba and all the trouble that the Chinese stocks are in. They scoffed it off. It was just like a non-conversation. So what are your thoughts on Alibaba? Are you happy to see that Charlie's still in love? Give us your current update on one of the most talked about stocks, I think, for value investors in the past year for sure. Go ahead.
Well, this is a stock that I personally own. And what's funny about that is I actually saw that news about Charlie Munger today. But you guys want to see something interesting? Can we share my screen?
Go ahead, Jimmy.
So on our community, we do these private live streams where we talk about one of the live streams Tuesday night is we build different investment portfolios. And I have consistently said I love Alibaba, and I bought it at $177.60. I thought that was a good price at the time. I really did. But I am aware of the risk, and I wasn't really going to go much further down that. I didn't know if I wanted to expose myself, but the stock just kept going lower and lower and lower. That what I did yesterday, or no, what day is today? Monday. I did whatever today is. So 2 days ago, I suppose, is I actually added more shares of Alibaba, bringing my average cost down to $141.67. So I chuckled about it when I saw that Charlie Munger bought more because I was like, awesome. Okay, good. So I was sort of thinking the right thing. And as far as the Chinese government, I think that the risks of Alibaba are frankly more limited than people think that they are. I think that I've seen 1,000 headlines about delisting risk. Okay, that's a thing, but it's not really a thing. I mean, if they delisted it, it wouldn't be like tomorrow the stock is gone. Oh my God, I have $141 average cost, and tomorrow the whole thing is gone. That's not the way it would go. It would perhaps get removed from the New York Stock Exchange, but it would still trade over the counter. You'd still have access to it. You'd have a notification too. They're not going to do it tomorrow. You'd have time to, I'll shift over to the Taiwan exchange. Everything, the world is sort of so flat from an investing standpoint that, I think the likelihood of getting burnt, from a total loss perspective in Alibaba is limited. Now, I do think that where the risk could come in is that the US government and the Chinese government decide to start taking swings at each other, and they're going to do tariffs or insane things like that. And, they start taking swipes at each other, and okay, fine, that starts hurting the perception of it. But at the end of the day, my question is, 10 years from now, do I think Alibaba is going to be bigger than it is today? 5 years from now, is it going to be bigger? And the answer is probably yes. The answer is probably it will be much bigger than it is today. And all you need is sentiment to change a bit for this stock to get at least closer to fairly valued. So in the meantime, I'm more than happy to sit on the risk, sit on my position and hold it for the next decade and see where it goes.
Yeah, I think we're in the same boat, Paul and myself. I'm sure Mo. It's Baba is such a small percentage of our portfolio. The boys were saying in a couple live streams, they were just hoping it just gets, let's just delist it, right? Let's just get to the delisting so we can move on and stop talking about it. But yeah, we'll see. So anyway, guys, make sure you guys fondle that thumbs up, of course. Keep asking the questions. I see a bunch coming in. We welcome, if you are new to Everyday Money from Jimmy's channel, we welcome you in. And if this is the first time you've ever heard of Jimmy from Learn to Invest, make sure you subscribe and find his channel. Speaking of the Chinese companies, Jimmy, do you know much about Tencent? I did a video for our personal community where we talked about Tencent. Again, Monish Pabrai has different ways to getting into this company, whether it's buying it through Naspers or buying it through this other company called Prosus. I guess it's a Swedish or a company from the Netherlands. Do you know anything about Tencent? Do you have thoughts about it? Are you interested in it? What was your take?
I haven't looked at Tencent in a while. I did do a video a while back, probably a year ago now, maybe a bit more, on Tencent, and it seems like an interesting company. Fundamentally, I thought that the business seemed like a very good business and it could probably do very well over the long term. But when I was considering a stock like Tencent or JD.com or Alibaba, well, I would lean far more towards Alibaba just because of the value side of it. So I've looked at it some, but not enough to speak too intelligently about it at this point.
Yeah, I think some of it is a little over my head as the standard, just normal person investor. Prior to meeting Paul, I made some more riskier plays. Then I got into ETFs, and now I invest with the Magic Formula stocks through Joel Greenblatt. So I've kind of leveled up, but something like that I think is a little over my head. So we have some questions coming in. Let's see. How long do you get this question a lot, Jimmy? How long do you guys wait for a buying opportunity? We get this question all the time. We tell people, try not to time in the market is definitely better than trying to time the market. I'm sure you get this question a lot, with this overpriced market, and we've done videos on how gloomy perhaps the next 10 years might be in terms of making money on stocks. What are you coaching your fans to do in terms of, do I get in now or do I wait for another fall? What do you think?
I get it now. I think that it depends on how you're doing it. If you're going down the road of you're going to buy ETFs, let's say you're going to dollar cost average. I believe I saw a question about, is it good to dollar cost average with something like the S&P 500 ETF, VOO or SPY or something like that. Yeah, I would just keep doing that all the time, no matter what. I do it every week, do it every month, do it every quarter, however often you're doing it. I think timing the market is very dangerous. If you're investing like that, now if you're investing where you're picking individual names, well, that's a little bit different. I I don't think I've ever held cash because I've been afraid of a stock market crash. I've held cash because haven't been able to find a good opportunity, and perhaps that's because the stock market is overvalued. But broadly speaking, if I am sitting on cash, it is while I'm looking for an ideal opportunity. And then, beyond that, I think most investors are better off dollar cost averaging something like an S&P 500 ETF and maybe a handful of other ones. But that's where I would be. I would, now if you gotta, I've been asked a few times, hey, I just got $10,000. Do you invest it all at once? Do you, what do you do with it at that point? And I think that depends on the long-term objective. Let's pretend you're 25 and you just got $10,000. You're I'm gonna put this aside for 30 years from now, for 50 years from now, whatever it is. Well, yeah, put it all in all at once. What's the difference? You know what I mean? I think I look at dollar cost averaging to be far more about, hey, I'm earning money from my regular job. My day job is bringing in money, and I'm taking a piece of that and investing for the long term. Very smart move. That's, I think, what the wisest investors do. If you got a lump sum, buying it later, what if we're wrong and the stock market doesn't go down and just keeps climbing higher? One of my first jobs at when I got out of college, one of my first jobs was at a mutual fund company. And I actually found people talk about how mutual funds don't beat the market. And, broadly speaking, that's true. But I would argue this is not a skill thing that is preventing portfolio managers from beating the market. It is a setup situation. So first off, depending on the fee, mutual fund, a lot of them charge, if they're charging 1%, well, that's 1% they have to make up, and that's not easy to do. But also, one of the toughest parts, one of the realizations that I had, one of the toughest parts about being part of a team that managed mutual funds was you'd get new money every day. So you'd have these handful of stocks that you wanted to buy, that you had in your portfolio, and you liked them, and then you'd get new money in. Maybe we had $10 million in the portfolio, you get another $1 million in. Well, you have to buy the stocks you already own. Most of the stocks that I own today, I would not buy today. I liked them when I bought them, but I wouldn't go ahead and buy them today. And mutual fund companies and even ETFs are the same way. They're just, slightly different. But mutual funds, as the money comes in, they have to buy the stocks at that price, which means that they are inherently going to get a very bad average cost. This is, I think, one of the most underspoken aspects of what Warren Buffett does well. Is Warren Buffett has the luxury and the clout, but really the situation that he can sit on cash, and he's out there, you're buying Berkshire Hathaway for what they own, not what they will buy, kind of. But he can sit on $100 billion and nobody says, why are you sitting on cash? If a mutual fund manager did that exact same thing, he'd be fired. You have to put money to work. Buffett has the advantage of saying, nope, I don't like anything. He can sit and wait, and then jump in and be like, okay, there's a position. All 100 billion is going into one position or two positions, whatever it is. But that's an enormous advantage. So that is why, for me, circling back to the question, that's why if you dollar cost average, just keep doing that. It's a very simple, very effective way of investing. But besides that, don't try to time the market, better price, all of that stuff. Look for good investments at good prices and then wait for it to get there. And then, if you're sitting on cash while it's getting there, great. But there's been times where just recently it happened. I found like 2 or 3, 4 good ideas. I wanted to buy Pfizer. I wanted to buy Bristol Myers. I wanted to buy AT&T. But I only had enough cash for one. So I picked AT&T. Pfizer sort of skyrocketed after that. So fine, whatever. But still, that's the nature of the game. I picked one. Over the long run, I bought AT&T because I want a piece of their Discovery deal. And in the meantime, I think that what they're doing is fundamentally good for the company. So, but my point is that I think that is a great I think just look for good opportunities, and I think that alone would outperform the market. Other than that, if you don't want to try to beat the market, just buy the S&P.
Yeah.
Call it a game.
What do you think about? I got Mo's morning bell. What do you think about Tesla?
Tesla, I think it is a high quality company. Okay, I have a problem with Tesla. So here's what I don't understand. Elon Musk, I believe, is selling like all of his shares, right?
I don't know about all, right, but I mean a lot, yeah.
A lot, a ton. I've never seen a situation where people are cheering the founder and the current CEO of the company getting out. You know what I mean? If I owned Disney and I found out that Walt Disney, in this scenario, he's still running the company and he bailed out of half of his stock, I'd be like, okay, yeah, I guess I'll bail out of mine too. What does he know that I don't know, other than the stock is obscenely overpriced? That being said, I do love the company. I love the idea of what they're doing. I do think it's brilliant, but, I think Elon Musk has the capacity and the money to be as eccentric as he wants. And people are somehow relating this to the quality of the investment. And as good as the business is, are we willing to pay such an obscene premium for, what they're doing at the end of the day? Like, it's possible. I think it's at like $1,100, $1,150 maybe per share. It is possible that goes to 2,000. It's also possible it goes to 800, 600. Like it could go in either. It is so obscenely overvalued. I remember I had done a video on marijuana stocks when I was just a small channel. I had like 10,000 subscribers, and I had done a video about, I was looking at where could we make money in this? Marijuana stocks were the big thing, and they were super popular, and they were way overpriced. And I thought, okay, a couple of these could get bought out. That would be an interesting play. So I did a video on it. I forget what I picked, 3 or 5 different stocks. And much to my surprise and disappointment, that video did really well. And I didn't have many subscribers at the time, and somehow that video was taking off. And I was like, oh my God, this is terrible. People are going to think that I meant invest in these stocks. So I did another video. I did a video after that. The follow-up was the future of the marijuana stock industry or something. I forget the title, but it was something along those lines. And if you go back and watch that video, the marijuana stocks were way overvalued. And I valued them out. I said, in the long run, a year, 2 years, 10 years, whenever it's going to happen, these things are going to get priced just like everything else does, based on their margins, based on their growth, based on their profit, based on a whole bunch of different factors, but they're going to go back down there. And what was funny about it is it ended up happening much faster than I expected, in that, over like the year after that, all the stocks corrected. And I actually went back maybe 6 months ago to check out that video and to see the math I had done. And they were priced right where we had said that they would go to. But that's not, that is just the way this stuff works. Right now, Alibaba is undervalued and Tesla is overvalued. This stuff will come back to the mean. This is the way it works in the long run. The key is to look past all the noise, I think. But that was a long-winded answer. I apologize.
Yeah, I was laughing to myself. I was trying to do the math, and maybe somebody out there can help me, because I felt like Tesla's market cap went up more than the price of all the cars they just sold in the quarter. And I was like, wow, it's just a weird concept. Like, it's now valued more than what do they sell? 250,000 cars a quarter. Well, they are doing well. I mean, I've owned 2 of them, and but I definitely see more and more EV companies. More and more EV companies with commercials on football games. They're all stepping up. I do know that even in the brand new cars, I think after driving Teslas for 4 years, I think the navigation software is just second to none. I get in my wife's brand new Honda, and the navigation might as well be like an old 1989 Atari game. It's just you can't even use it. But Tesla is just faster than my phone. I swipe all the things, it gets me where I need to go. It avoids toll roads. It really is incredible. But I do see, a lot of EV companies stepping up, and the commercials. Some of these cars are beautiful. So do you have any? So a lot of people are asking about EV companies. Do you have any other thoughts about EV companies? I can't imagine you're in love with any of these. Are you, Jimmy?
You know what? I like. I like the idea. A stock like Tesla, a stock like Neo. Companies like that. I think I like fundamentally what they're doing. I'm in love with their business. I do think it's very impressive. From Tesla's perspective, or for Tesla, if you look at their financials are quite good. I just wouldn't pay, the price for them right now. And that's the thing, is that I think that a lot of investors get disconnected from, the growth of the company, as in one example, versus, the value that you're paying. And those are very different concepts. I like the EV market. I heard Ford is breaking new highs and doing new things. I heard they got a new EV truck coming out or something. But I, from a value investor standpoint, I just don't get, okay, this company has X number of growth. It's growing by this amount. It looks like it's going to have these kind of profit margins. It is an amazing company. They're doing a good job. By the way, they're not the only, it's not that they're the only EV company, but there's other companies, other industries that are growing quite well. And this one you pay, X for, this one you pay 100X for, and that's my issue is. So overall, I like the idea of EV. I just don't, not the price. I will be happy to buy Tesla when the stock comes back to earth. And it's going to, at some point, it might be today, it might be 5 years from today, but at some point it's coming back. And the other possibility, there's another scenario that it doesn't necessarily come back to earth in the way that, I think a lot of people, what I've envisioned is the stock tumbling. It's also possible that doesn't happen. Stock's at, I think, 1150, give or take. We were looking at this on last night's live stream, and it's at 1150. It is possible it goes to 1250, then 1050, and then 1250, and it stays there for 5 years. And by the way, in the meantime, the fundamentals are catching up. But if you invested today at this price, 5 years of zero return. And that's the key, is that, I see people talk about Amazon, and I often see Tesla get compared to Amazon, because if you bought Amazon, even with the crashes, it was such a enormous return. But if you bought Amazon before the tech bubble in 99, if you bought it then, it took 10 years to get back to breaking even. And sure, since then it has skyrocketed, but if you had rules, value rules that you followed, that you sort of lived by from an investing perspective, you wouldn't have gotten involved in Amazon. You would have gotten involved in some other company, probably a more defensive name back in the tech bubble. And then when everything crashed, well, then maybe you get involved in Amazon. And if you had done that, well, your return would be like triple what it would have been year to date, or not year to date, up to this point, from pre-tech bubble to post-tech bubble. You'd be way up. You would have such an enormous advantage over every other investor that wanted to be in it just for the ride. So that's my hesitation with EV companies right now.
Yeah, specifically Tesla. Someone wrote in the comments, it seems like Elon has become more of a celebrity. And then I think, gosh, celebrities just come and go sometimes so quickly. When they're hot, they're hot. Look at this football player, Antonio Brown. He's on a great football team, and then one blow up later, now people are like making memes about him and laughing at him like hours later. I'm like, well, yeah. So it's funny. I love Tesla. I love the disruption, but we will be Tesla owners one day if that thing comes back down. But I definitely envision in my mind, can this? I sort of think the opposite of Paul sometimes, or at least I try to push him and challenge him. I'm like, can this be the one stock that just never comes back down? Can it just keep going and going and going, regardless of what value investors think? So who knows? But so Jimmy, tell me this. I see some questions.
No.
Oh, the answer is no.
Well, the answer is, like I said, it could just stall out. But from a value perspective, there's not a shot a stock can return. What has this stock returned over the past year? You know what I mean? Let me see. I might have that information. Over the past, let's say over the past 1 year, Tesla's up 55%, 56% over the past year. Over the past 5 years, it's up 2,400%. If it did that again forever, it would dwarf the size of the U.S. government. Like it's an irrational. At some point it has to slow down.
Yeah, I agree. Yeah, Jimmy, people bust my chops a lot because I had 140 shares of Tesla a long time ago, and so I get these comments sometimes like, "Oh, Seth, just break down. Go ahead and buy Tesla like you wanted to back in the day. You'll be fine. Don't listen to Uncle Paul." So, yeah. Jimmy? Do you exercise any options contracts? Are you interested in that? So maybe a 3-part. Do you buy options, sell puts, covered calls? Are you interested in getting into trading? And these are some of my goals moving forward for this year. Do those interest you? Are you into that stuff?
Yeah, I actually, for a while, so before I started the YouTube channel, I started a research company. And with the research company had different sort of lines of business, and we were writing investment research for hedge funds and things like that. And I also wanted to start my own fund. So we put some money into it, and we got some investors to put some money into it. We said, all right, we're going to sort of incubate this fund for a while. And it was all on trading options. And I actually found it fascinating because I had a few people when I first started working down on Wall Street that really started teaching me the options market. My father used to work on the floor of the New York Stock Exchange, so he introduced me to a lot of people that knew a lot of things. So I got to really learn a lot from professionals, like hands-on up front when I was fairly young. And I found I was trading options all of the time. I mean, the strategy that we were putting together, it revolved around options and trading around dividends, basically. And it was a fantastic strategy. I loved it. Since then, for my personal investment portfolio, I focus more on, I would write covered calls as a way to sort of generate income. And I do smaller things like that, if there was a position like I thought about with I thought about with Alibaba, instead of buying, when Alibaba was down to like 111 at some point, not long ago, a couple of weeks ago, I was like, you know what, I should just buy some options here, buy some call options, because I think that I think this is way too low. And I would do it just for a trade, let this thing get to 130 and you make crazy money. But interestingly, Alibaba options were way overpriced relative to most similar priced options. They were way up there. So I was like, apparently I wasn't the only guy to think of that. So I'm a huge fan of options. I think if used correctly, if you don't know much about options, learn a whole bunch and then do it. This isn't something you experiment with, because the landmines are huge. It's not like stocks. You could, I think one of the dangerous parts about the stock market today is after such an enormous bull run, everybody thinks they're super smart. And, Buffett says it well, that Buffett says that, everybody's a genius when the stock market's going up. And I think that's the dangerous part. Is I've talked to a couple of my friends that are managing their money, and they've got big investments in like AMC and stuff. And I'm, trying to, talk them out of it. And they refuse to. They're like, hey, no, listen, it's working. I'm making money. You don't know what you're talking about. Your way is not the only way. And okay, I agree. I certainly agree. My way is not the only way. But you bought AMC at like $40, and you for some reason you think that this is still going to work. And I just don't like. He has admitted that the stock is worth a lot less, then why buy it? I just don't understand. It kills me.
Yeah, we sound like old fuds, Jimmy, for sure, talking about this. I see so many comments about Elon Musk. I know I'm just some dumb guy in this world, and people are like, "Oh, he's the smartest guy in the world, and the technology." And I'm thinking, I always wonder how many people that believe in Elon Musk and Tesla do they even have they ever gotten in the car? I know Elon likes to promise a lot of things. I guess deep down, Jimmy, I just I fall out of love with people that overpromise and underdeliver. Like, I guess we kind of all forgot that, like, remember they were going to make a truck and they didn't? I know they've made the Y, which is great. I have one in my garage. But, like, I have friends who have down payments on trucks. They were going to give away roadsters if you had got, like, they're going to make a roadster. They're going to make solar, like, years ago, available to people like us. I put a down payment down for a battery and solar. Luckily, I got it back. But then I think to myself, okay, so Elon's just the greatest thing ever, like, in terms of technology. And I'm like, you know, I don't know if you've been in a Tesla, Jimmy, but after, like I said, I've had 2 Teslas now. It's really like, a Tesla is a car with an iPhone, with an iPad in it. And it's actually slower and not as useful as an iPhone. Now, the self-driving is potentially going to be great. I don't know how many normal people are going to go in their app. I can go in my Tesla app right now and click, yeah, I want full self-driving, which frankly doesn't actually exist quite yet, but it's $10,000. There are people on YouTube that believe that the software will outpace car sales one day. But I mean, in essence, that's kind of what at the moment, maybe I'm crazy. Tell me in the comments. I mean, I know I'm dumb, but I mean, like, it's just an iPad in a car, and it doesn't actually work as fast or as good as an iPad. Like, if I had an iPad in the car, it would be better. Now, and the other thing is, every time I hear the champions who are saying self-driving is going to be the best thing ever, it is very clunky. If there's Tesla owners out there, it's clunky. You put that car in autopilot, and I mean, at least once a trip, something weird happens. It sees something it doesn't like. I'll be doing 80 down the highway and go under a bridge. It sees a shadow and just throws the brakes on, like throws a computer out of my wife's hands. Yeah, it's just interesting. I mean, I've never seen a company with so much fandom. You know, there was a decade that went by that said, don't drink the Kool-Aid on Apple, you know, or Macintosh. Don't be that guy. And I've argued all this with Paul, you know. So what are your thoughts on all this? I'll read some comments while you're talking, Jimmy.
I think that I mean, I do think Elon Musk is brilliant. I watch a lot of his interviews, and I admire what he has done. And even from a business perspective, you know, I've never been inside a Tesla. I do not own a Tesla. I actually have a much older Toyota Prius, but that was more because it was super cheap, and you know, yeah, it seemed logical at the time. But I think Elon Musk is brilliant, and I think that I'm impressed from a business perspective what he has done. I haven't followed much from a promises standpoint. He might be over promising. I don't really know. I spend way more time in the numbers, and it's funny because I did this video before called 8 Steps to Analyze the Stock, and it's basically learn about the company, learn about the industry, learn about where the business is going, and then look at the price and try to value the stock. So I've gone through that process with Tesla. And as I was going through the process, I was like, oh my God, this is amazing. This is absolutely brilliant. The growth was good. They were just starting to go profitable at the time. They had fantastic growth. And then I looked at the value, and and granted, the stock was like 10 times lower than it is right now. But I looked at the value and I was like, okay, yeah, no, wait for it to come back. So I think that the two should be separated. I would argue that a lot of the fandom behind Tesla and Elon Musk is probably well deserved. Again, I don't know much about. I've never been inside of Tesla, so I don't know much about how the car operates. And I think self-driving can be good. You know, I think there would be a lot of regulations behind that. That would have to be. I think self-driving, in my mind, makes a lot of sense if everybody's doing it. If all the roads are automated, that would be amazing. But I just, especially here in America, I just can't picture there's going to be a large part of the population that is like, no, I'm driving. And, a Tesla goes by and they swerve into it. And, I could just see all sorts of problems coming out. So the regulation alone to let that happen, I think is going to be difficult. But all that being said, I think Elon Musk is fantastic. And I think that where the business is going is fantastic. But again, it all comes down to value. If somebody says, I love it, Elon Musk is brilliant, you have to own it, okay, fine. But I'm guessing those are the same people that would have said that very same thing back when, Edison was around and they started General Electric. And do you still want to own General Electric today? I mean, maybe, but General Electric has sort of been a struggling business for the past 10 years. So, I think it's dangerous to assume that what has happened will continue to happen and will continue to happen forever. As brilliant as Elon Musk undeniably is, I mean, he's a very smart guy, and I actually kind of think he's funny. As brilliant as he is, okay, do you want to overpay? I love my house. And if I walked in and somebody was like, hey, $100,000 for the house, absolutely, I'm all over that. But if they said, all right, same house, 10 million, well, okay, maybe not. Like, to me, the price you pay is so very important. So I think it's a mistake to say he is brilliant, he is amazing, the company is awesome, therefore I have to buy it. We're skipping a step there. The step is, what price are we going to pay? So I think that's the key to the whole thing. I can look at Tesla, I can be a fanboy of Elon Musk and also say, yeah, no, I'm not buying it, not at this price, and that's only because I have investing rules that I try very hard to follow.
Yeah, I've never, I mentioned this to Paul on a show, driving around a Tesla, you see the interest in it by normal people. And I've pulled up into a state park and you see a 5-year-old just freeze and wave like, oh my God, there's a Tesla. Then you see old folks, grandpas, the same way. I mean, there is something to love about it. But if you don't know,
a cool looking car.
Yeah, and the concept's incredible. But if you don't know how to valuate companies or put a value on it, you could be caught holding the bag. So of course, be careful out there, folks. Jimmy, mention what you're doing on your channel. I know this is new. You've started a Patreon. You have a free cash flow calculator you're introducing. Talk about that.
Yeah, so coming out of the meeting with you guys, we actually started our own investing community. And originally the idea was, hey, we're going to start the community, do these live streams, we'll build different investment portfolios, sort of help teach people in line with the learn to invest sort of concept. And then we very quickly realized that, one, I'm super impressed within our community. Every Friday at 1:00, we do these live streams where I have a calculator, I have them hooked up to things like we have a data feed from Y Charts, from Bloomberg, from S&P, from Morningstar, and we sort of run through and use different information to value different types of stocks. And so people throw tickers at us and we punch them all in. But it's been amazing to me how many undervalued companies we've found. And then that very quickly led into, okay, we got to put this on our website. So right now we have investorsgrow.com, and it's just a very basic website. And in fact, we haven't even put up there the ability to sign up for this. You really got to do it through one of the links that we have on one of our channels, on one of our videos. And but what ultimately we realized is we've got to put up a website where we can allow people to value stocks. So one of my I'm a big fan of discounted cash flow, and it's great, but it doesn't work for every company. For example, a bank wouldn't work well for that. A small startup wouldn't work well for Tesla. Something like Tesla, you should really value using something like enterprise value to revenue or enterprise value to EBITDA, because then at least you'll be able to look at their history and be able to compare it and say, all right, if I'm going to buy it based on either peers, or perhaps based on their own history, which would probably be dangerous given how high they've traded at for a long time. But still, any one of those metrics, by the way, have Tesla looking overvalued. So just like that, we started, okay, let's put up a website that allows people to do more in-depth research. And I think that when I think about the software that you guys offer, I think that compared to where we're going with our website, I think it's fundamentally different, and that your software, I think, is great for, hey, I want to build a well-diversified portfolio of, let's say, 30, 40 stocks, and I want these stocks to be good value and high-quality companies. Well, your process sort of takes you through how to identify, do they have reasonable debt loads? Do they have reasonable value characteristics right now? Do they have reasonable growth? And I think that process that you guys do is great for that. What the website that we're putting up is where we're different than what you guys do is, if somebody has that diversified portfolio, or perhaps they have a portfolio of ETFs, maybe they own SPY, and then they say, you know what, I want to beat the market I'm going to pick 2 companies. I think deep dives, our 8 steps to analyze the stock video that I mentioned before, that video is, I'm going to walk away truly understanding this company. And I think that when you truly understand a company, it allows you to shake off much easier the noise out there, because you've researched the company, you've done it so thoroughly that you understand what's really happening with the business. So when noise comes out, that's something that maybe moves the stock, but you're like, yeah, that's not that big of a deal. I knew about that, and that wasn't, this being down 3% isn't that big of a deal. The stock should not be down 10% today. In fact, that's an opportunity. That's, I think, where our website is going, is that it's more for either one, I want to quickly value stocks with discounted cash flow, or 2, I want to do a deep dive and I want to sort of go line by line. And, for me, I showed my portfolio before. I have a handful of stocks that I own. That's it. I don't own any ETFs. I don't own anything like that. And I'm perfectly happy sitting there. If I own 10 stocks for 10 years, I'd be perfectly fine with that, because they're 10 stocks I know extraordinarily well. So, that's really where we're trying to go with the website. We're trying to get it to be that people can do their own valuations and their own in-depth analysis on stocks. And ideally, I'm trying to make it, as simple as possible. And in the meantime, to sort of incentivize people to come over there, we did exactly what you guys did, that, if people sign up, then we lock in that price forever, which I think is a very fair thing to do, a very good thing to do. And we also, like I said, we're doing the 3 live streams. So if people are like, all right, that's great, the website realistically will be up in the next couple of quarters. I keep saying by the first half of 2022, the website will be up. But in the meantime, people want to value stocks. So what we're doing is that's why we're doing the live streams. So we're getting so many different opportunities coming out of the live streams. And in fact, we just started we're calling it a research project, just because I didn't want it to sound like homework, even though it's kind of homework. But basically, anybody who wants to join in, anybody who wants to participate in it, where this Sunday, we do a Sunday live stream where we practice the 8 steps. We're assigning the different companies, to different people. It's only going to be 2 or 3 people per company. And the theory is we're each going to do our own in-depth research, each write our own report or do bullet points or video, whatever we want to do. And I'm sort of helping guide each group individually for doing the research while I'm doing the research as well. And then we offer it to our community. But I figure that allows more people to have voices beyond, just my voice in the community. Or, I think that there's so many people with so many different life experiences and so much insight in different industries that, I think that it could be really good. I'm excited to see where the research project goes. And that's only going to be even more interesting once we get the website up and running.
Yeah, how did you develop this patience to have such a small portfolio? Like we interviewed Manish Pabrai, and he had 2 holdings last quarter. I think he has. Someone says he has 3 now. We always get a lot of sentiments on our channel of like, God, these guys are idiots. They never buy anything, and it's like, I think that's the point of value investing. And Monish said as well, like, he's got this whole team on the 5th floor of this beautiful building in Austin. And like they say, it's actually very rare if they buy anything throughout the whole year. It's like a couple great plays. So where did you develop this concept of discipline? I'm still working on it. I know a lot of people who are new to our channel and yours probably struggle with this. We want to buy. I guess if you want to do that, you can get into trading with Mo. But where did you develop this patience to learn how to do this, Jimmy?
Well, it's for me, it's not even as much patience as it's I go back to the rules I have. So I have, for me, a stock has to be less than my calculation of fair value. And I'm using generally discounted free cash flow. Although if I was valuing a bank or something, I would just use price to tangible book value. That works very well and would have to be below that calculation. But a lot of it is within the process that I have. So the basic concept of the 8 steps to analyze the stock that's what I use. The reason I made that video is that when I was first trying to start learn about this, and when I got out of college and I was in the industry, there was some training, but there wasn't a lot. They really, I worked at a hedge fund, my very first job out of college, and day one, they were like, okay, here's the 4 companies you have to understand. You have 2 days to do it. Go. And okay, fine. I had no idea where to go with that next. So in time, I gradually sort of worked out a process that worked for me. So when I made the video, that is the process that I use. But the idea behind it is, okay, first understand the business. So you read different pieces of the annual report. Don't read the whole annual report, just read different pieces of it. And then as you're reading those pieces, you're looking for a reason to eliminate the company. And that's really, I think, what can seem to be patience is really most stocks that I analyze, there's something about it I just don't like. It just doesn't have that sort of it factor for me that I look at it and I'm like, I don't know. I'm not sure I'm fully on board and the price isn't that great. Or I'm like, all right, I really like the company. Microsoft is a perfect example. I love Microsoft. I love the company, but it's never been at my calculation of fair value when I've looked at it. It has gotten there a couple times. If you look at big dips in the market, COVID, when that dip happened, Microsoft hit there. I bought Disney with everything I had. I had all of the cash that I had. It was, okay, all of this in one position because I bought Disney at like 90 something dollars a share. And a lot of that was, I think Disney at the time, before COVID, it was trading at about 150 per share. And then COVID happened and went down to like 80 something dollars per share. And my entry price was at like 96, 97, 98. I forget where it was. But when it got down there, it was, okay, everything. In fact, I remember turning to my wife and being like, all right, everything has to, we have to, one of my friends had come to me right at that time. And he was like, he had like $40,000 in a investment account that he was moving from one. He closed one account. He's moving to another brokerage house and it just got moved. And he's like, what should I do with it? And I was like, all of it into Disney, all of it right now, because the stock's going up 50%. This is too low. Put it up. And he didn't do it. But the tougher, so for me, those opportunities come so rarely that for every 100 stocks I research, 10 of them are interesting, go on a watch list. One of them looks like it could be a good buy. And then, so much of it is timing. The market's been high, so I don't buy that much. And plus, I have limited capital. It's not like, because I don't, going back to the comments before, because I'm not sitting on cash. If I was sitting on cash, sure, yeah. If I got $100,000 tomorrow to invest, yeah, sure, I'd probably bulk up how many stocks I own. But a lot of that would be based on, do I have something I'm in love with? But I'm a big fan of, if you're in love with the stock, not like Tesla in love, but like you're in love with the value, you're in love with the business, you're in love with the future, you're in love with what they're doing. If you are in love with it, I'm game to push everything on
Yeah.
the table and, and let that play out, because over the long run, this stuff is proven to work. And the other thing is, I often get asked about when are you going to sell a stock? I'm in Intel. I own Intel. I love Intel. But I'm very aware of the risks of Intel. I need them to create better chips. I need them to start competing with AMD and NVIDIA. And if they, imagine tomorrow they came out with news and they were like, you know what? Yeah, we're not really doing that anymore. We're going to increase our dividend. We're going to tone back our R&D spending. Immediately, I would sell the stock. Okay, fine. You guys, my investment thesis is that you guys have the money and the clout in the industry to compete. You've just fallen behind temporarily while AMD is doing their thing and NVIDIA is doing their thing. You can overtake them. You've got the money to do it. Will you do it? That's the real question. And if they do, great. If they do, the stock will eventually figure it out. If they don't, then I'm out. And it's not even this isn't a short-term thing. If they came out with news tomorrow and said, we're having production problems. Okay, good. That sounds like an opportunity. It sounds like you're trying to do it. You just haven't figured it out yet.
Yeah.
I'm banking on you will. So for me, it's less of a patience thing and more of a discipline thing. If there's a difference.
Yeah, I mean, you're right. I think it's a combination of both. I was shocked. Paul of late has talked on the show that he's getting into options. He's trading, in terms of our community, Paul is trading $500,000 with following Mo's rules. So he's getting into day trading. I'll be joining them next week in Mexico to start this process. So that's pretty exciting. And then Paul dropped a bomb to our community yesterday saying that he put $10 million into the market, 40 companies he bought yesterday, sort of his little book formula. And he's going to be a little more open about his portfolio this year. So, Paul's being a little more active, and it's kind of shocking to me. But regardless, people are asking, Jimmy, when do you sell a stock? A lot of people are asking, like, what is the process in your mind going through when you're done with maybe a value play?
Well, I think that there are two ways to do this. So I would distinguish between a long-term investment and a trade. And if you're doing options, it is by definition a trade because it's limited in time. You can't, buy those forever. And a trade, I'm a big fan of. This is something we were talking about yesterday here. I'm a big fan of defining your rules and then trading according to those rules, sticking with that trade or moving in and out of the trade as, based on whatever the rules that you came up with before you got into it. From a long-term investment, as much as this is going to sound like a cop-out, I don't intend on selling them. It would be if, like I said about Intel, if they fundamentally change their business, fine, I'll get out. If a stock like Disney, if they decided they're closing half their stock, I can't think of a scenario where I would get out of that. So for me, it's not, I'm trying to buy low and sell high. I'm trying to buy low and then hold it. My question for Disney is Disney going to be worth more I'm looking up the market cap of Disney real quick. The market cap of Disney is $286 billion. Fine. Decent size company. But in 10 years, is it 500 billion? Is it a trillion? I mean, there's a whole bunch of $1 trillion companies right now. It could very well be at that point. It could very well just keep growing at a reasonable clip. Same thing with Alibaba. I had mentioned before, Alibaba could just keep growing. And these are stocks that I'm more than happy. I'm looking out 20 years. Do I think 10 years, 20 years from now, the stock could keep growing? Yes, I do. I think that long-term, Disney has a place. I think that long-term, Alibaba has a place. I think that, now that being said, there's a million scenarios from now to the next 10 years and the next 20 years that I believe could do. There's a million different scenarios that could change my opinion of that. But, General Electric is a perfect example of that. In 08, before 08, when General Electric was shifting everything over to, it's also when their stock was doing the best, they were shifting everything over to GE Financial. for any long-term investor at that point, people might be looking at that going, ooh, I sort of bought you guys because you guys were, manufacturing jet engines and things like that. I don't know when they acquired their jet engine business, but maybe this GE financial thing is dangerous. And ultimately, that was the thing that really hurt GE. So, but my point is that that's what I'm looking for. I'm trying to identify the business, and that's why I go as deep as I go when I do my research. Is I'm trying to truly understand the business, and then ask myself, do I think that this is a well-protected business going out the next 10 years? If Buffett says it all the time, and I think it's a very viable question. If the stock market got shut down for 10 years and it opened back up in 10 years, are you going to be happy that you own that business? I'm not talking the world. I'm talking COVID shutdown. I'm talking the stock market. You can't trade it. Your portfolio today is locked in, right? We're no longer going to allow you to trade any of your positions for 10 years. But the business gets to keep operating. Mm-hmm. Are you happy you owned it? You know what I mean? And I think that's the key is, did you pick the best one at that price that 10 years from now, imagine everything got repriced in 10 years. It doesn't come out where it is today. It gets repriced in 10 years. It is possible Tesla, as we were talking about before, things have changed with Tesla. God forbid something crazy happened with Elon Musk. God forbid, something happened with him. And, the business flails a little bit in 5 years, but you're locked in at the price you got now. Are you happy you owned it at the price you bought it at for the next 10 years? So I make less exit plans. I'm much more about be super strict about why you buy. And then if those rules get violated, so, I bought Alibaba thinking that the market is mispricing this whole thing. Alibaba is probably one of the examples that I might sell it if the stock went up high enough, because although it wasn't really a trade, it is a long-term investment. It's borderline. For me, it's in the gray area because I think the stock could easily be a $300 stock. And I think that if the market reprices it and if it were to get overpriced, there might be other better opportunities, because I do hesitate with what the Chinese government will do in the long run. So that's sort of been my way of looking at when to sell a stock.
Yeah, Ragnar said, what did he just say? He said, Intel's going up. Should we take profits on Intel? Might be a flagpole. Ragnar, you're going to have to talk to Mo tomorrow morning. If that is a flagpole, he would probably say be cautious. But I guess there's a combination we're trying to teach on our channel, Jimmy, which I'm trying to learn, is both long-term investing, buy companies, hold them forever. And if, like you said, and Warren Buffett says, if the market shuts down for the next 5 years, I should be fine and dandy holding this company, something like Disney. And then if you get antsy, maybe you can start trading. You can start that daily. And we've had people in our community, I don't know if you've seen it in yours, but I have a dear friend in this world who's very reluctant to invest anything into a market. And next thing you know, he started learning Mo's rules. He's trading. He's telling me a story. He was following Mo's trading rules last week. He was picking his kid up from one event and driving him to another. He bought, a few $1,000s of a stock. Must have been 10 grand at one point. Drove his kid from school to home and then fired back up the app. Saw he made 2.5%, sold, and made like $300 on his trip home. So I'm eager. I got the FOMO. I'm eager to learn the trading, especially following rules by Mo. And this year is definitely one of my goals. So what are your goals for this year, Jimmy? I mean, obviously you have the community you're looking to grow. As we come in on the hour and wrapping up here, what are you foreseeing for yourself, your channel, both personally and growth on your channel this year?
From a channel perspective, obviously, I hope that the YouTube channel continues to grow, and I'd like to get to the point where I'm doing more videos. We've been doing so much on the back end with the website and trying to get that working, and trying to get, in the meantime, we've built like an Excel calculator that I'd mentioned before. So all of that stuff has taken a lot of time. I'm really hoping my biggest objective is to try to grow the community and to get the website up and running. And I want to try to make investing as easy as possible for people. And I think that the idea of people learning, whether it be trading or whether it be long-term investing or, there and everything in between all of that, I think the idea of making that available is super intriguing to me. And I think that a lot of it is just, knowledge gaps. I think even people that are, hardcore overpaying for Tesla, somebody jumps in and buys Tesla today, I think they are overpaying for it, but I don't think that the person's doing it necessarily because they want to overpay or because they don't care about the value. I just think that a lot of people, this stuff isn't broadly taught, especially in like schools and things like that.
Yeah.
I think it's a shame how under-taught it is. I know I've got a 5-year-old and a 7-year-old, and I've already begun to try to teach them how to, I make them take a piece of their allowance and how to take a piece of their allowance, put it in their case, SPY, VOO, ETFs like that. And I think that as they get older, I'll start teaching them how to do more and more, but I would expect that would become a habit for them. Investing, I think, should be a habit. So my personal goal for the year is to get the website up and running and to try to help people sort of learn more and try to be able to develop their own habits that ultimately, I think that there's something to be said. I mean, if somebody's investing and maybe they're making decent money at their job, but they've never really put money aside for investing. And if they start learning about this and start taking, 10% of their income and put it in an investment portfolio every month, 5 years from now, when that is a big chunk of change and they have a good idea of what they're doing because they've stuck with it for 5 years, I think I think that could be very, very empowering and very life-changing for people. So I really want to try to, get the website up and running so it helps people get to that point.
Yeah, we've totally wanted to expand, especially at Everything Money. We wanted to expand our episodes about talking to kids. My 11-year-old, who knows of you well, Jimmy, I don't even know how I could paint this picture, but on Christmas morning at my house, my 2 kids, 11 and 8, 2 boys, they got a rather substantial gift from an uncle, $200 cash, and they both opened the cards and I wish I had this on video. They started chanting, Baba, Baba. And I couldn't believe it. I mean, maybe I'm brainwashing them, but the concept of investing and saving money is really great. And so the fact that I've ingrained this in their minds so early, I'm just very happy because I didn't learn this till like 35 or 36. So to know it at 8, they're very committed. I'm sure your kids will be as well. So, well, as we wrap up, guys, I guess, Jimmy, it seems like a lot of people really like this. We should do this more often. If you're a Jimmy fan and you're following Learn to Invest, if not, welcome to Everything Money. And if not, make sure you fondle the like, subscribe to both of our channels, check out Jimmy's Patreon. And Jimmy, final thoughts on today's talk and moving forward. Give it to me.
Yeah, I mean, I thought it was a great talk. I think that there are so many interesting questions out there. And I like these types of conversations because I actually think that going back to trying to help people feel empowered about what they're doing with their own money, I think that oftentimes it could be a small thing that is preventing somebody from doing that, from taking the step to start investing or to invest in that idea that they've had for a long time. They've just, been afraid to do it. So, I know that's what you guys are doing in your community. That's what we're doing in our community. And, I think we're both, heading on parallel paths. So I'm very excited to see, where all this goes. So, yeah, I got a couple of videos coming out this week. I just did a video yesterday or 2 days ago on top 5 dividend stocks. All of those stocks came from our live streams that we're doing, and I'm doing a value video and a growth video, growth stocks. So I got those coming out over the next few days. So come over, check it out. If you haven't signed up for our private community and the upcoming website, please come over and do that.
And Jimmy, I've said this before. You have this structure to your videos. I know when you came and visited us in our studio, I think you were at first a little nervous about, going live and talking about companies. And now I see you today and you're just flexing like a boss on this live stream. Like, it's just, it's freaking rad to see, your growth. It's, Paul was very adamant about not, I wouldn't say partnering or collabing with people, but it's always a no. It's just like a no. We're on our path. But something sparked when we had you in. We went to dinner for way too long. Remember that 3-hour steak dinner followed by drinks? Yeah. And so Paul's in love with you. I know you and Mo chat all the time. So it's just been great to have you in our corner as well. And let's hope both these channels can go to the moon. In the end, we feel, I'm sure you do, in the end, we just feel a great sense of pride being able to educate and guide people, and we get so much positive feedback. I'm sure you do as well. We just, whether it's on our Instagram or in our community, the feedback really has enlightened and uplifted my spirit in life in general. I'm sure it has for you. So that's it, guys. This is Jimmy from Learn to Invest. Make sure you subscribe, check out his videos. I'm sure we will do this again. And I appreciate you, Jimmy. Thanks for coming on, man. You're the best.
Thanks for having me.
Yeah. All right, guys. Tickle the thumbs up on the way out. Follow Jimmy, and we'll see you guys next time. Appreciate it. See you, Jim.